And his son ran the upstairs. He was the main broker, and his other son ran downstairs. So he wanted his son. He says, and he goes, why do you want a job here? Because we were talking basketball. I'm like, because I want to, the pit there, that's the lane. I want to get in there and start chucking elbows, man, and make some money. And they had the big booth in the back and all the phone banks, guys on the stands, the whole 9 yards, man. It was huge. So it's one of those things, man, where all of a sudden it's like the crowd, without even looking behind them as people are walking to and fro, the people coming towards me are partying. I think that it's a 3D chess game and it comes from every angle. I really do. And I think that what you had, the biggest shift, I could tell you the biggest change I've seen over time, which is pretty simple, but also dramatic. Kind of an interesting story, actually. I mean, yeah, back in the day, no one woke up as like a broker or a financial guy or a Wall Street guy, because you really, it was a lot of still, investment banking, but this kind of thing, now they actually teach this stuff in school, trading and whatnot. But I actually played Division I college basketball at Colgate University, had a tryout with the Sixers. I got cut. I actually had a contract to go play in Portugal. And just before I was going, one of my high school friends worked on the commodities exchange in the World Trade Center, on the COMEX. And you have all the four exchanges, the oil, the NYMEX was there too. It was a huge place. And it's the place where Trading Places, that was filmed, actually in the silver pit, believe it or not. So it's his birthday. I'm going to take him out before I go off to Europe, and we're going to go paint the town red. And so I go down. He invites me to come down to the trading floor. So I go down to the trading floor, and while the trading's still going on, the last 10 minutes or so, trading ends. He has to do the write-ups because, of course, everything's on paper. There's no electronics, anything. I mean, when I say there's a tsunami, residue of paper left on the trading floor, you're walking through paper, kicking it out of the way as you go. That's how deep it was. And you have to go downstairs then and check every trade. It's done in the write-up room. So as I'm standing here waiting for him to finish up his little regiment, this gentleman comes up to me. He's about 6'4". He's in his late 70s and asked me if I ever play basketball. So we have a nice conversation about basketball. He used to play in the Garden, Madison Square Garden, the mecca of college basketball back in the 40s, when NYU and Columbia were like the big deal, in college hoops, no longer. But so we had a nice conversation about hoops, and then my friend's ready to go. We're walking across the exchange center for the door, and I turned to him, I go, how do you get a job down here? This place is amazing. And he goes, you got to know somebody. I say, don't you know anybody? You've been here for 2 years. Can't you introduce me? Can't you cut a guy a break here? He goes, that guy you're just talking about owns the largest firm on the floor. So in one of those life-defining moments, I did a foot plant, about face, went back and asked him for a job. And it's a pretty long story. I'll tell you a little bit more of it. I mean, he was retired. He owned the company. He had developed it right from the beginning of commodities trading, for crying out loud. And his son ran the upstairs. He was the main broker, and his other son ran downstairs. So he wanted his son. He says, and he goes, why do you want a job here? Because we were talking basketball. I'm like, because I want to, the pit there, that's the lane. I want to get in there and start chucking elbows, man, and make some money. Of course, he just ate up the basketball analogy. So he has to call his son, because his son really runs the company. He got like 35 people just in the gold and silver pits.
The trading pits of the 1980s were physical, loud, and brutally competitive. Deals were sealed with hand signals and paper tickets, not code. Weldon entered the industry shortly after the collapse caused by the Hunt brothers' silver squeeze and lived through seismic events like the failure of Continental Illinois Bank and Black Monday in 1987. Unlike today's digital ecosystem, information moved slowly. Edge came from proximity, instinct, and pattern recognition. Over time, Weldon transitioned from commodities into currencies, bonds, and hedge fund strategy, building a macro perspective forged through multiple crises and credit cycles.
And they had the big booth in the back and all the phone banks, guys on the stands, the whole 9 yards, man. It was huge. So it's one of those things, man, where all of a sudden it's like the crowd, without even looking behind them as people are walking to and fro, the people coming towards me are partying. And this guy walks through as if he could just parted the Red Sea. I kid you not. I'm not exaggerating. And, I'm 6'10", 300 pounds playing basketball. And this guy was about 5'7", whatever. But I never judge like size and presence based on height. I mean, that's kind of ridiculous. This guy had such presence, like that he was energy before he got to where he was walking physically. And he comes over to his father says to him, I think about hiring this guy. And he walks over and he sticks his face right in my chest. And normally people don't do that when they meet me. They kind of step back a little bit. And he looks up and he goes to his father, I want him right behind me. And he walks away. So the guy hired me on the spot only because I was tall enough to hand paper over people, to see over people into the booth, have to learn the hand signals. I had no clue what I was doing. And just to extend a little bit further, because it's kind of a complete story, was I called my job. I was working as a telecom, and then I had to, cancel my contract in Portugal and so on and so forth. I come in the following Monday. He takes me under his wing. He shows me all that's going on when the market's open, what phones are OPEC, what phones are the bullion banks in London, what are the arb lights to Chicago back then with silver. It was a big deal. And he takes me then to the members' dining room for breakfast. And I'm not kidding you, 10:30, he looks at me, he goes, okay, you can go home now. You've seen enough for your first day. I'm like, oh, okay, whatever. I go home. I come back in Tuesday. Well, Stanley Bell was his name, Stanley B. Bell. And he only comes in on Mondays and Fridays. He's not there the rest of the week. They didn't know what to do with me. So they sent me downstairs into the write-up room where the other son ran things. And this is kind of the reconciliation place, right, where all the trades actually got done. And all of a sudden, man, you could feel the energy, the ceiling is shaking and people are now running. And there was a bank of stairs over here. People run up and down the stairs and like, what's going on? And the phone rings. And it's the guy who ran the upstairs booth for Stanley. And he goes, get that big mofo up here now. And he got the phone. He turns to me and goes, Stretch, get up there. Of course, that's not my nickname for the next 4 years, but whatever. And it was the day Continental Bank had failed in Chicago. And the market went crazy. And they stuck me in the point, in the gold, there's the silver pit here, gold pit here, their bank of phones here. So I was right in the middle, just to hand paper and do all this. And I knew nothing. And it was trial by fire. And that spot was the next step into the pit as either a trader or a broker or even a local, trade for yourself. And there were 30 people. I mean, I just stepped over 30 people to take this spot away from them. And I ultimately earned the respect from them. And that was the beginning of my career, in the markets, was out of the blue in a, whirlwind 72-hour period.
Yeah. To understand today's fragility, Weldon traces the story back to 1971, when President Richard Nixon ended the dollar's convertibility to gold, dismantling Bretton Woods. That single decision untethered money from hard backing and launched the modern fiat era. Since then, debt has compounded exponentially, while financialization replaced production as economic fuel. Add to that high-frequency trading, derivatives leverage, and central bank balance sheet expansion, and markets today resemble a complex pressure system. Information now spreads instantly via social media, but depth of analysis has declined. Speed increased. Understanding did not.
I think that it's a 3D chess game and it comes from every angle. I really do. And I think that what you had, the biggest shift, I could tell you the biggest change I've seen over time, which is pretty simple, but also dramatic, is the time frame that it takes for people to get and digest and act upon information. So, back in the day, it wasn't, you didn't have all this social media, you didn't have, a lot of outlets, and you used to have like a dedicated news service, to get this kind of information. I stepped up, and I left the job on the floor, took a huge pay cut to go learn the currency and bond markets at Lehman Brothers, and then ended up with a hedge fund in New York. So, yeah, I've seen every level. But I think what's really important within that context of that question is to look at the picture, the movie that really dates back to 1971. You could date it back to Volcker in 78. You could date it back to the Plaza Accord in 85. But I've seen this entire evolution of the global macroeconomic data as it stands now. And to me, that's the biggest change, is how much that has changed and how we've gotten to the point where we are now, where, I came into the silver market right after the Hunt brothers. So, one of the first things you learn is the market's manipulated. We knew this right from the beginning. Some of you've had in your back pocket for 40 years, like the JGB market in your back pocket for the last 30 years, like the debt you've had in your back pocket for the last 50 years. And now you've reached tipping points where these things matter now because of the bigger picture and the choices we made over this entire time frame, dating really back to 1971. And I think in the sense of what's different between the floor and now. And the other thing I would say is you have this mentality now where this is easy to do. You go on social media, everyone's an expert. All right. Everyone's going to tell you what's what. All right. I would say that a lot of people don't dig into the depths of the macro or the data or the math like I do, which is why I have a business. I mean, it's why some of the top hedge funds pay me, because I might uncover something that they're not seeing. And if I can provide one little value add that you didn't see and give you a new perspective maybe on something, that's part of what we do. And I would say now it's a more valuable service now because people don't do it. You know, you get the labor market report, you see it on Twitter, you see it on financial news, you know, it's all one vested interest to keep the market floating, stock market at least. And, you know, people act upon very shallow information. And I look at it like what you have these things that last, and everyone's kind of aware of them. They don't really fully understand them or the implications of what might happen the day it's an epiphany where it matters. And all of a sudden it's like new news. I mean, so you and I probably do this a lot. I mean, you talk about something for 2 or 3 months, and then one day there's a story that was actually, maybe 6 weeks old, and the whole market blows up because it's an epiphany to most people. And I look at it this way. I dig below the surface. I dig deep for data nuggets and put them together. And what I love to do is put all the pieces together. Connecting the dots is huge, and then applying it to the macro picture and the markets from the bottom up, the top down, and actually making money. All right. So when I kind of think about all of that, most people, you need the bulk of people to see what you're seeing in the micro underground. So it takes stuff to come above ground. And when it gets above ground, people, instantly react in a much quicker way than they ever used to.
Weldon argues that stress is building across the financial system in sovereign debt, collateral markets, and currency dynamics, yet equity markets remain historically elevated. That imbalance concerns him. Historically, when pressure builds without correction, resolution comes violently. From 1987 to 2008, crises were preceded by subtle signals buried in data few examined closely. Today, U.S. debt exceeds $34 trillion. Deficits remain structurally high, and Treasury issuance continues rising. Meanwhile, liquidity conditions tighten and geopolitical risk expands. When markets ignore mounting strain, volatility doesn't disappear, it accumulates.
I see pressure everywhere, and that's kind of the bigger picture problem. And where I see where it's not being reflected is any relief valve in the U.S. equity market. So to me right now, and I'm not like a gloom and doomer, and I wasn't really thinking the stock market might crack wide open. I thought maybe you would have, once AI's leadership ran out, you might have a rotation into metals, which you got last year. We called that one really well. And then you might have just kind of a slow bleed, which I think is kind of about to happen. We're on the verge of that. But the more you don't relieve some of that pressure, the more dangerous it is when the valve gets turned. And we've seen this movie before too. I mean, I go back into 87. I made a ton of money in 1987 because you see this stuff coming. And when you start to see it coming and you've seen it time and time again, very similar to 2007, where if you dig down and you see the movie Big Short, I mean, this is why people, do this kind of work. So I'm not the only one, obviously. But when you talk about, digging in, and sometimes now it takes a while for that to work. And this is always one of these conundrums in doing what we do. It's like, well, if you're a gold bug, you can say gold's going up forever and it's going to do what it just did forever. Well, when are you wrong? And then when are you right versus your time frame and your risk? And so to me, it's about being, a money manager. So to me, if I'm wrong, I'm out, right? I might think gold's going up. Doesn't mean I own it. All right. It depends on the risk reward dynamic and the macro and a whole mess of other things. But in the context of, kind of what your question is, I say pressure is everywhere. And it's even in society, it's in people, it's in animals, it's in the weather. We've discussed this off camera. I mean, people ask me, which one of your hobbies? And I say astrophysics and the theory of quantum entanglement and some of these things. Like, I'm a math and science geek, and I am a science geek, as much as I am a math geek. And some of the science around where the solar system is in the Milky Way, and I can get into all kinds of astrophysics. But it's not, global warming, that's not even a thing. I mean, anymore, because NASA's redefined it as solar warming, because this is happening everywhere. And as the pressure on the planet intensifies for a variety of reasons, and as the forces that are juxtaposed now where we are in the Milky Way polarize, the gravitational pull. So what do you see? You see a polarization, and you see both ends of the spectrum, the frequency spectrum, vibrating at a higher volatility rate. And that's what you have. So it's not that it's only getting warmer. You just saw. I mean, we get record snow, you get record storms, you get record drought, you get record floods. I mean, it's record everything because everything is under pressure. You see it in human behavior. I mean, tell me about it. And we can talk about the human heart vibrates at 7.83 hertz. That's the resonance of the human body to whatever degree you have other energy centers. But as far back as they can measure this, the vibration across the planet is 7.83 hertz until just the last 15 years. So people are literally, it's up to 8.29 hertz. It spikes, it's all over. But, we talk about averages and long-term, formulas to figure this stuff out. But the bottom line is people are disconnected from the planet. They're disconnected from the ground. And you see it in so many different ways out there, just in terms of the quickness to anger, the violence, the lashing out, and even to the degree of the ignorance that's out there where people, you see a couple headlines, they think they know everything, and you have kind of a half of a society that seems brainwashed almost. So the pressure is all over the place. Ultimately, it would hit the markets. Ultimately, that means the Fed will print more money. Ultimately, means the dollar goes down more, and ultimately means that gold goes higher.
Weldon views today's geopolitical tensions not as isolated conflicts, but as a long-form resource war. In 2018, China launched a yuan-denominated crude oil futures contract, a direct challenge to dollar-based oil trade. Nations like Russia and China increasingly settle trade outside the dollar system. Energy routes shift, supply chains realign. The Arctic, rich in untapped reserves, grows strategically important. This isn't merely politics, it's monetary architecture. If global trade gradually moves away from dollar settlement, demand for U.S. Treasuries weakens, and the world's reserve currency begins to face structural pressure.
And in politics, and let me just add, I don't mean to interrupt you, but you're hitting such a good point, because when you think about it, the biggest polarization to me ties back to really World War III, which in my mind started in 2018 when China opened the crude oil futures exchange, trading Dubai OPEC grade crude priced in renminbi, and had Russia benchmark their oil crude against it. I mean, that was the beginning of World War III, which is a resource war. And we have come down to a situation now where it's kind of this side of the world versus that side of the world. You have this new kind of trilogy of power there where it's OPEC, Russia, and China together. And it's all about resources. It's all about the Ukraine. Why do you think they invaded Ukraine? It's food, all right? Why do they want the Crimea? So they could ship it to China. When she was in Beijing when Putin was in Beijing for the Olympics, which Biden refused to go to, they cut out a deal where Chinese state-owned banks lend Russia 30 trillion renminbi to build a new Siberian pipeline for crude oil and to engage Kazakhstan to ship natural gas. And what happened literally months later? They reallocated natural gas from Europe to China. So when you see this, and now you talk about Greenland. Greenland is the tip of the iceberg in terms of the Arctic and some of the dynamics going around the Arctic, and Russia building military bases, and the U.S. wanting the dome of protection, and China declaring themselves I forget the exact phrase they use, but it's like a near the Arctic country type of thing. So this somehow gives them some rights, where you're talking about 30%. Potentially 30% of the known resources on the planet could be underneath the ice there, let alone as the ice is melting, it's shortening shipping lanes and all these kinds of things. This is only going to get more pressurized in terms of resources at this side of the world versus that side of the world. Now you see, I think some of the current administration's policies are great. I think it's done a great job in a lot of ways. Trade has not been one of them. And, I think we should have engaged Canada and Mexico first and presented a united front to the rest of the world. Losing Canada and now UK talking about dealing with China more than us. This is not good because it's dollar, it's global trade. They're already more than 3-2 every month, both exports and imports on a ratio basis relative to US, China does. So why is it still priced in dollars? Well, it's not going to be forever.
Debt, like a seesaw, doesn't collapse gradually. It reaches equilibrium, then flips. For decades, US Treasury securities were treated as the ultimate safe asset. But recent signals suggest diversification away from concentrated dollar exposure. Weaponization of sanctions, trade friction, and financial fragmentation are altering perceptions of neutrality. If foreign demand for treasuries slows while issuance accelerates, yields must adjust. That creates funding stress across the global system built atop U.S. debt. The question is not whether pressure exists. The question is when the sand finally outweighs the rocks, and the balance shifts.